Alrighty, traders, good afternoon, good morning, good evening, and welcome to an unscheduled session here with the Pip Grabber Trading Strategy. Now, the goal on this is to establish 20 pips a day to get out of the market, take the profit, get out of that trade. Now, there's two ways to trade this. Number one, there's one way that we follow the signals as it is. Secondly, if we have a accumulated amount of positions in, we can go ahead and follow those and go ahead and trade those in the direction of the move. I'm going to explain all of that right after this. Alrighty, traders, well, welcome back, and yes, we can go ahead and grab 20 pips today. You are guaranteed to find a trade today. In fact, I am guaranteeing you I will find a trade today for you to be able to trade today. Now, what I'm going to go ahead and do is I'm going to go ahead and first explain the two ways to be able to find trade opportunities. If you follow me on my Instagram or my Telegram account, you'll notice I do post a couple of trades that are being set up. But there are multiple trades. There are so many trades that I go ahead and post based on the strategy that I do follow. Now, there's two ways to be able to do that. And if you're asking me, Gary, do you have a trade copy? Yes, I do, for the Pip Grabber. But this is what I want to go ahead and explain to you. If you follow the signals as it is, all the signals that are generated by the Pip Grabber, that's one way to be able to trade it. That's for a trader that simply just wants to go ahead and enter the trades and allow the market to go ahead and move to the target and not have to worry about keep watching the trade. But if you are looking at placing trades based on accumulated positions, which means that if the Pip Grabber strategy builds up positions, and those positions are built up to a point where you've got 4 or 5, maybe 6 or 7, maybe even 11 positions in on that, you can go ahead and say that based on that information, we'll then go ahead and take a look at the chart, and if the technicals read that we had a very strong resistance or support level, we can go ahead and actually place a trade and grab a lot more than just 20 pips. So there's definitely ways. And I'm always going to suggest that, traders have a strategy where they follow a consistent rule set of entries and exits, right? But then also at the same time to have another trading account that they can go ahead and look for these big opportunities. I call them, I don't know if I can call them holy grail opportunities, but they certainly are there for them to go ahead and trade. When you look for these accumulated positions, it almost tells us that the market is at some point desperate to move in the opposite direction, which means that we can make money on that trade. Let me go to the chart and I'm going to show you exactly what we're talking about right here. And I'm going to have to grab my phone too. But let's go into the chart and let's take a look over here on the chart. Okay, so if we look on the chart right here, I'm going to take a pair that I know I have a lot of positions in right now. And that pair is going to be on the, looks like I'm going to have to look on the Aussie Canadian dollar right here. So I have a lot of positions in on Aussie Canadian. Now, let's take a look at the details. If I look at the Canadian, I have a lot of sell positions right here. Based on the Pip Grabber, we have a bunch of trade opportunities that are selling. In fact, I'm probably holding around about 8 or 9 positions that are something like this, that are in at multiple levels right here as the market has gone against. Now, we're looking for price to move down. Now, I am selling on these positions. Now, the question here is a lot of you might be saying, well, Big Dog, why are you selling when the price is moving up? Well, because we're anticipating correction. And so if I look over here on the chart, I do notice this is a 4-hour time frame. I do notice that we do have a swing low right here. Price moved up to this level. All right, right up here. Then we hit the level right there. So which means I've got to go ahead and extend this once again all the way up here to the top. And so right now we are at a third wave. All right, it's going to be counted like this. This is going to be my wave 1 down here. So wave 1, this is 2 right here. Here's 3. Here's 4. And so we're in the 4th wave. Now, the 5th wave is expected to get to the 1.5 1.618 right here. Sorry, 1.27. All right. So we're expecting the market to move to the 1.27 right here. Now, if I'm expecting price to move to the 1.27 right here, then that means that we could probably see another move of around about, looks like another 14 pips or so before we go ahead and hit that level. So we've got about a 14 pip move. Now, one thing that we have to be clear about is that we do have this as a third wave, and then price can still go back below this level right here. So this is not to say that we're not going to go back below here, all right, because we could go back below then. If we do go back below there, we're going to go ahead and take a look and see what the market's done. Now, what's just happened right now, we just recently had the US dollar CAD rate decision that came out, and so we've seen not US dollar CAD, the CAD rate decision. And with a CAD rate decision that's just come out, clearly, without even looking at the charts, just the way the price has moved right now, we've seen a weaker CAD. I'm suspecting that we're seeing that they kept the rates unchanged. Kept the rates unchanged, and that's what's caused this rally in the market right now because of weakness out in the Canadian dollar. And so let's go ahead and take a look and see if I am right with what I just said right here. I'm going to go into the news right here. Let's go ahead and refresh this. And here it is. Rate decision, overnight rate kept unchanged at 0.25%. So 0.25% meaning that we're going to start seeing a weaker CAD. Now this could just be a short-term move, all right? It doesn't necessarily mean this is going to be long-term. This could be just a short-term reaction in the market, which means that traders, we're still going to go back to the technicals because everything so far lines up with the technicals. We're seeing that prices over here, price is going to come up back here. We're going to see a bit of resistance right here, and we're anticipating price to move back down. Let me see if I can find anything else right here that could be of some importance on this swing. Okay, so this is also important right here. Although the market has created this this bullish rally, we also can take a trend line from the top right here, connect the dots, and let's go ahead and draw that across right here. So this trend line is important, right? It's not important for us right now, but it's going to be important for us as price comes back to retest it. So as we see this rally, we know that there is going to be a correction move. So you're asking me right now, well, Big Dog, what is the opportunity right now? What can I do right now on this particular chart right here? Well, right now is a very good place. In fact, it's getting closer and closer to that 1.27. Here's a great place to start leveling in on a position for a short position. Now you may say, well, Big Dog, I'm already in. I've got a couple of these trades already on the Aussie CAD. Well, that's okay. Then just hold on to your position. But right now, for those that are not in on a trade, it's a great place to start selling the market right now because we're heading into a fifth wave, 127. And so we're going to anticipate maybe a bit of movement right there, but the market's eventually going to turn around and head back to south. Now, the target to the downside is a lot further. There's a lot of opportunity for traders to get in and make a lot more profit to the downside just because where we're at right now on this chart. So there's a lot of downside opportunity. If you follow my signals on the Pip Grabber, you'll notice that the Pip Grabber signals will probably only give you a exit position probably about 60, 70, maybe 80 pips down south. So at the moment right now, getting in short is good. Let's go ahead and take a look and see what that's going to look like right here. So I'm going to go into the chart right here. So what you're going to do here, you're going to enter the market with a sell. All right. So let's go ahead and kill all of these positions right here. Okay. So this is going to be a sell right here. Right, so we're selling, and I'm going to mark this off. All right, and I'll go ahead and post this, but this is where we're going to go ahead and look to sell. So we're selling at a price. What is price at right now? Price is at, on the Aussie CAD, is at 93.70. So we're going to sell at 93.70. Okay. Now, you're selling at 93.70. With a selling 93.70, what you want to do is you want to place you want to place entry points above the market 25 pips apart from each other. So right here at 93.70, you want to enter another trade that's going to be above here at 93.95. There it is. All right, so that's going to be the next entry point. So your next entry point is going to be here at, let me get this information here. Your next entry point is going to be Alright, so your next entry point is going to be right here. And that's going to be selling sell at 93.95. Alright, 93.95. I'm going to go ahead and sell right here. Okay. Now you will do this, and you will continue to do this as the market continues to rally. So if the market does rally up higher, we'll continue to add on positions 25 pips apart. Now all you're looking to do on this trade is looking to grab 20 pips. So each time the market moves up another 25 pips, you're going to go ahead and enter the market again at around about 94.20. So 94.20 is going to be the next entry point right here. Okay, so we're going to go ahead and enter and sell again at 90. And let's go ahead and put it right here. Sell at 94.20. All right, so now you're going to end up selling again right here at 94.20. Now, can you get the idea? So every 25 pips, we're going to go ahead and sell the market. We're going to sell the market, and we're going to sell it 25 pips apart from each other. And you're going to look for price to move down. Now, what I did here is, I know I have accumulated a bunch of positions. We call it multiple trades that have loaded up, and we're now anticipating price to move back down south. And so what we did is we went to the technicals and said, hey, listen, let me take a look at the technicals, become a little more technical, and go ahead and take a look and see how the technicals are set up. And right now, with the market setting up at the fifth wave, we're expecting price to at least move down now to the the fourth wave low, which means this. If we go to the fourth wave low, go ahead and mark that off. That's that level right here. This is where price is going to be. This is called our fourth wave target right here. All right, this is our fourth wave target right here. So this is where we're expecting price move to. So traders can continue to hold their position. They can decide on two things. Either they're going to go ahead and take their 20 pip profit on this trade, which means they will take profit when the market drops down to 93.50. So 93.50, which is about 15 pips away from where it's at right now. So we're in about 5 pips of profit. But when it gets down to 93.50, they can decide on either taking their profit on that trade or making a decision to go ahead and chase after the fourth wave, specifically if we close below the previous third wave high. What number is that? Well, take a look right here. The third wave high is right here at 93.37. So if the market goes ahead and closes out and we move back below this 93.37 level, then we're on our way down towards 92.84. That's the fourth wave target at 92.84. All right. So this is on the Aussie CAD. Now another position that I am quite deep in as well is the New Zealand Canadian dollar. All right. So let me go ahead and check. I got to open up my my chat here. I got a bunch of. Let me see if I can go to my YouTube channel here and just open up that video that's going live right now. There it is. And I'm going to have to mute it. Okay, it is muted. Let me see if I can get the chat open here. All right, there it is. Okay, good. All right, got a couple of traders here chatting here with me. All right, fantastic. So at the moment right now, as we take a look at this right here, okay, we're looking for, all right, good. Well, both, I'm glad you found me, buddy. I'm glad you found me. All right, so what we're going to look for right now is we're going to look for a setup, okay, on the New Zealand Canadian dollar. So let's go to New Zealand CAD right here. All right. So, oh, hang on, I've got it right here. I don't know why I did that. All right, here we go. New Zealand CAD. Now, New Zealand CAD, same thing applied as applied on this as well. We can see that we got a nice little head and shoulders pattern right here. Price that moved down, stalled right here. There's inside consolidation, but it's broken up. It's broken through. So we're going to anticipate that the New Zealand CAD is going to continue its rally. But what I want to do is I want to take a look and see, based on the movement that we've just got, I really want to pay attention to this last rally that we had. And so from the low down here, I'm going to go ahead and mark off a low-high swing right here. I notice that we have a 1.618 extension here. But look how the market just gone ahead and extended itself. It's gone ahead and rallied. Hasn't really turned around. Now, we did have a little correction right here. There's a small correction right here. And this is interesting here. Notice how the market had come back and pretty much tested the 1.618 right here. Then bounced back up again and gone and it's trading towards the 1.27 here right here. Now, this is real interesting, and this is where I need you to focus. This is real interesting because of this. All right? It's interesting because of this reason. We have resistance coming here at the 1.27. That's going to be our fifth wave completion. All right? So there's good reason to want to go ahead and sell right there. The other thing is we did come off a very shallow retracement. So even if it doesn't make it to the 127, price is going to come back down into a deeper retracement move. And it's going to take out that projected wave 4 right here. This is projected. It's not a wave 4 confirmed yet until we hit the fifth wave right here. So we could come back down deeper to come back to retest the backside of that trend line before going up towards the 1.27. So traders, there is definitely, without a doubt, without a shadow of doubt, a decision that we are going to see a bearish move on the New Zealand Canadian dollar. Now, the question on this is, how do we trade it? How do we trade it? How do we go in on this, and how do we trade it? Jack says, I think it's Jack, right? He says, I'm stacked on the Aussie CAD. Absolutely, and hanging on that. I'm going to hang on to that trade as well. Well, let's go ahead and take a look over here. As we dig into the details right here, let me just kill that. We're going to go ahead and look to sell on this trade right here as well. All right. So I want to go ahead and sell on the New Zealand CAD because I'm anticipating it. So I'm going to go ahead and sell. Let's go ahead and post that right here. So what price are we at right now? New Zealand is at 19.19. So we're going to sell at 19.90. So this is it right here. All right, we're selling. 19.19. Let's see if I got it. Yeah, there it is there. So we're going to sell right here. And we're going to do exactly the same. We're going to sell at 19.19. There it is there. Now, what am I going to do? I'm not only going to sell at 19.19, but if price moves up a little higher, I'm going to go ahead and enter a trade at 90.44. So I'm going to enter another trade. As price moves up higher, I'm going to go to 90.44, and I'm going to enter trade there as well. All right. So we're going to go ahead and say enter trade right here, and that's going to be a sell at 90.44. Now I'm going to talk about. I want you to hang around and just stick around, traders, because we're going to talk about equity management. Because remember, there's two ways to trade it. You stack positions, just like we have one of our traders right here that's stacked on the Aussie CAD. I'm stacked on the Aussie CAD. We're going to talk about how we survive through this stuff, where we actually stacking and trading these signals without actually being too concerned about too much risk. You have to have good equity management. You have to feel comfortable. In order for me to walk away and not be concerned about my trade opportunities or concerned about my equity, I have to have good equity management in my trades that can withstand the sort of drawdowns that we may have to go through at times. Because a lot of the times the markets are moving sideways. And you're probably asking that question, Big Dog, why do you follow a strategy that you stack up and sometimes you go into this drawdown? Because 80% of the time, this is real, 80% of the time, the markets are moving sideways. And so with me stacking, 80% of the time, I'm getting in and out, and making profits all the time. And yes, 20, in fact, it's got less now. With the way the market's trending right now, probably about 15. So I would say 85% of the time, the markets are range bound. 15% of the time, we may get these little bursts, little pushes, all right? And so when you see these little pushes, little pumps in the market, where the market pumps up, all right? We know that when this happens, it's only 15% of the time, but we always have to make sure that our equity management is always good and in line, so that we can accommodate these type of pushes, right? So when the market pumps and we get these big pushes, we have to make sure that we have got good equity management so we can sustain ourselves through this push. Okay, and I'm going to talk about this. Stick around. I'm going to talk about this towards the end of the video today. So let's go ahead and take a look again at this trade. So now with this trade here, I'm going to not only enter this point right here, the market continues, but I'm also going to look to enter a little higher. All right, a little higher right here. So which means at 44, we need to go in at 69. Right here will be our next trade. So this will be our next sell trade right here. 25 pips above that. I'm going to go ahead and say sell at 0.60, 93.69. All right, so 0. I didn't say that right. So this one right here, $90.69. All right, there we go. So that's where we're at right here. So this is where our next entry, and we're going to continue to enter. We're going to stack up, because with the anticipation that price is going to move back down south again. Now, if we're going to enter at multiple positions, this is what we're looking for. There's two things that we're going to be looking for right here. One, we're going to take a 20 pip profit. That's one option. For those traders that want to take a 20 pip profit, that's it. That's all you're going to chase off, these 20 pips. For those traders say, well, Big Dog, if the market has gone ahead of the shallow retracement, and we do get back below this. Now, how far away is that? Let's take a look right here. From this point right here to where the market's at right now, that's already 42 pips. So you could wait for the market to drop 42 pips, then go ahead and put your stop at 20 pip profit, and then allow the market to drop another 52 pips as it chases after that low. So you could actually gain on this 92 pips. This could be a 92 pip opportunity if you decide to hold onto your trade and watch it very closely to see if price is going to move back below that significant high. If it moves back below the significant high, it could go down towards that low and then chase after that profit target at the low. So that's something that you may want to go ahead and take a look and watch out for. Okay. Now, if I go back to the chart and I look at right here, then these are my targets that I'm looking for right here. Here's a price target right here. That's for that 92 pip target, and that's at 89.21. 89.21. If it's going to be at 20 pip, of course that'll be well short of this level right here, which is at 87.74. But if you're going to chase after this 87.74 level, you're looking at around about 40 pips in profit on that one right here. So you have a lot of options here, and it'll all be decided on how this sets up right here. Now, if you're interested in a trade copy, and I believe it's only for international clients, you can check out the description below. In the description, you'll see a link to a trade copier that you can go ahead and subscribe to at very little that gets you in on all these trades. Each of these trades, now I'm not talking about these stacked up trades that we talk about in these live sessions, but I will be talking about these stack up trades in the live sessions. But if you want to continue to follow all of these trades based on these trade signals, check out the description below. Okay. Now, let's go back over here and take a look at this trade, for instance. Now, I want to touch on equity management. And I've said this before, and I'm going to say it right now. In order to be able to trade both strategies, you've got to have good equity management. What does that mean? Traders, you have to look at your trading account like this. Okay? If you've got 100,000, I'm just going to use it as an easier number for me to work out. If you've got $100,000, all right, then you need to trade your account with a 40% cap on it, which means that you're only going to use 40% of your capital, and then you're going to work out your equity based, or your equity management based on 40% of your capital, which means that $40,000 is what you're going to then work out your risk on. So if you're going to be looking to chase after, let's say 10%, okay, and it's possible because that will be aggressive, all right? So you're looking at a 10% return, it's aggressive return per month. You can do that. But keeping in mind that that 10% return is going to be based on the 40,000. You see, the 60,000 is always going to be your security, your buying power. So if all goes wrong and you need additional equity, you have to have that available. You know, a lot of traders look at their trading account and they go, well, big dog, I've got, I've got $100,000 in my trading account. I can trade with big lot sizes, and I can really be aggressive, and I can trade off, chase after the 10-15% return per month off my 100,000. But the problem is, if they're running to trade scenario where they get over leveraged on a position, they're not going to have enough buying power to get back into the market to be able to survive through that. And so as a fund manager, as I've been doing that for 20 years plus, as a fund manager, we often have, and trust me, I'm not going to advocate here that I've never blown a trading account up. I've come pretty close. I actually haven't blown one up, but I've come very close to blowing one up, that to a point where we can't trade anymore in that account. It's just too little money. And so we decided to go ahead and close it down. So I'm telling you right now from experience, right? When you go ahead and you make sure that if you go ahead and trade, and you want to trade that you can sleep at night, because that's important. I've gone through nights where I haven't slept. I mean, back in 2008, I had a 2-day marathon. Didn't sleep at all because I was over leveraged on a position. And I had to watch it tick by tick because I had to start managing my positions as I started making sure that I had more equity in my account to continue to trade. Those are terrible trading times. I have a lot of those, and I don't want to repeat that. So this is the thing. Take 40% of your capital and trade it. If you're chasing after 10% on your return, keep in mind, if you're chasing after 10% return on that on that trading account, actually what it really boils down to on the total portfolio is 2.5 times less. So which means that if you're trading with chasing after 10%, you're really chasing after around about a 3.5%, quarter 4%. You're chasing after a 4% return on your capital. If you're looking for 10%, you're really chasing after a 4% per month. Now, even a 4% per month is a pretty good risk. But the good side of that is, or the better side of that, and what's great about that, is that your drawdowns are also set up based on what your capital returns are going to be at. So which means that if you're chasing after 4%, in most cases, and I know the traders go, oh, well, big dog, you know what, I don't want to risk more than 10% of my trading account. Well, the fact of the matter is, always consider that whatever you're chasing after is profits, 3 times that would be your drawdown. 3 times. Which means that your drawdown will be around about 15%, give or take a few. 15%, that's your drawdown going to be. But keep in mind that that drawdown on 15% is low in comparison to what you can return. Because the strategy that I've been following and the strategy that you've been involved with me over the last few, and I'm going to go ahead and show you a couple of details right here. Just take a look over here. This strategy, and I'm going to go ahead and show the chart right here. This strategy has produced over the last, how many months? Close to 9 months now. Take a look right here. We started with 700 pips in January. Then February was 1,900 pips. In March, 2,000 pips. April, 1,200 pips. May, 600. May was low. June, 1,100 pips. In July, 2,000 pips. In August, 1,600 pips. So there's been a cumulative amount of pips, and of course September is just really new. So we've accumulated quite a few pips, but just chasing after these 20 pip grabs the whole time. Grab another 20. And have we had some drawdown periods? Yes. I'm never going to say there's never going to be a drawdown period. There's going to be a drawdown period. But you can only survive through that drawdown period if you have the right equity approach to that. And so that's what we do. Now, what I'm going to be doing over the next week, starting next week, we're actually going to do, this is an unscheduled session today. We just decided to go ahead and do it. But starting next week, we are going to actually start a daily session. It's going to be on a Tuesday, Wednesday, and Thursday. Those are the sessions I'm going to try and push out. But what we're going to do is we're going to be talking about these trade opportunities based on these accumulated Pip Grabber setups. But also at the same time, there might be traders that are going to be following in the signals or following with the trade copier. But we're going to talk about these other trades because I believe you should have 2 trading accounts. One that's generating profits for you, looking for a good 2 to 3% return per month based on that breakdown of your equity management, looking at trading 40% of your capital. But then you should have another trading account that you're looking to gain a little more. Placing a little bit more risk on each trade, but focusing in on just a few currency pairs, like maybe 2 currency pairs at a time instead of trading 5 currency pairs at a time. But what you're doing is you add a little bit more risk, but you're chasing after these, call it these holy grail setups, where you have accumulated positions, just like we have on the Aussie New Zealand dollar, just like we have on the sorry, not Aussie New Zealand dollar, the Aussie CAD and then the New Zealand CAD. Just like we have on those 2 positions. When we get stacked up like this on our trade copier, we know that then we can start looking at another setup to look at accumulating that position and looking for a sell-off just like we did on that on those 2 positions. And we can make a lot more money based on those rule sets. So you're building up a 2-3% return on your quick trades, your scalp trades. But then you got these big holy grail trades, or these call it whatever you want to call them. But we've got these great trades where we can go ahead and grab 60, 70, 80, 90, 100 pips based on swing analysis and based on where the market's sitting, based on structure, swing analysis, support and resistance, all that good stuff. So that's definitely something you want to go ahead and pay attention to as well. We will start those sessions next week. Tuesday, Wednesday, and Thursday is the days I'm thinking of doing it. I will go ahead and have it available. So if you want to get if you want to be part of those live sessions, make sure you subscribe to the channel right now. Subscribe to the channel, and also go ahead and smash the like button. Smash the like button so we can get this video out. We definitely want to beat the Google algorithm. So go ahead and smash the like button. But at the same time, subscribe to the channel, because when I go live, you'll be notified. And as I go ahead and set up these sessions in the next few weeks, as I go ahead and set up the session in the next few months, as we do these daily, you want to make sure that you get access to those live sessions. So let's go take a last look at where the trades are right now, and then we're going to go ahead and close off the session right now. So let's go ahead and jump into the trades. Take a look and see where we're at right now. So we've got the New Zealand CAD is pretty much at our entry point, and the Aussie CAD is pretty much in 5 pips in profit. So those are the trades right now. This could take us, most of the day, and it could be a 24-hour position. It could be a 48-hour position. It could be a whole 3 or 4 day position. All right. But what we're doing here is we're now going to make a decision whether we're just going to chase after our 20 pips, or are we going to gain 60, 70, 80, or 100 pips out of that trade. Keep focusing in on my YouTube channel. I will give you updates. If you haven't subscribed to my Telegram channel as well, go ahead and subscribe to the Telegram channel, because I do send updates through the Telegram channel as well. So check out the Telegram channel. Check out the description below. There's details below that you might be interested in. And also, the Telegram channel link is also in the description below. So check that out as well. Smash the like button, subscribe, share this video, and I'll see you next time. Thank you. This is the FxBigDog.